Hi, everyone. This is Holly Ruxin. As you know me, I am in beautiful Tahoe for the summer, and I am delighted to be here with Brandon Welch. He is one of the fund managers of Mad Capital Agriculture Fund, which we have on our platform. I recently had lunch with he and his partner Phil in Denver, and the questions that he answered were so amazing that I thought it would be great to have you hear straight from him about this amazing investment. So, Brandon, thank you very much for being with us.
Thanks for having us. Appreciate it. Yeah, excited to talk about regenerative ag today.
So, Mad Capital is a debt fund. It's a 10-year debt fund that is investing in organic farmers and sustainable ranching. So, first of all, can you talk a little bit about what regenerative agriculture is for our audience?
Yeah. So most of the way that food is produced right now in the United States and across the world is in a way where farmers are trying to convert the natural wealth that's been built over the course of millennia into financial value. So they are essentially converting like the prairie in the Midwest into corn and soybeans and then selling that. And they're doing it in a way that's extractive. They're taking more from the soil than the soil is producing. So that means ultimately that there's more soil erosion. They're using harmful chemicals and synthetics to try to increase yields, and they're doing it in a way that is coming at a cost. For example, 30% of all arable lands across the world are now unproductive because of the way that we've been managing soil. So regenerative agriculture operates on the opposite end of the spectrum. Regenerative farmers and ranchers work with nature versus working against it. They're using practices that really embody ecology and natural principles like protecting the soil, minimizing disturbance, improving the amount of diversity that's on an individual farm. And all of these practices ultimately mean that the farm can sequester more carbon. It's going to have more butterflies and bees. They're going to be able to grow healthy, nutrient-dense food without the use of nitrogen or glyphosate or these other harmful chemicals you hear about. And they're doing it in a way that's truly not only sustainable, but it's regenerative, which is beyond sustainable. They're able to improve the capacity of the farm and bring back soils that were once unproductive and bring them back to life. And those are the types of farmers and ranchers that we work with here at Met Capital.
Well, I was taught in third grade, you are what you eat. So that's amazing. And it's also along, our whole theme of having our own sustainability within our clients and then creating sustainability on the planet. Um, so fantastic. And of course, as our clients know, Montcalm tries to pick investments that fit well into our asset allocation. The reason that we chose this investment also, besides the great work you're doing, is that it's a medium-term debt fund.
Mhm.
And that can be a nice diversifier from other longer term private equity or venture capital or venture debt, et cetera. And so, can you talk about the organic farmers and sustainable ranchers that you choose for this investment and
Yeah.
how you choose them? I'm sure you come across a lot of them and why that makes for a successful fund.
Yeah, so we like to work with leaders in the food system movement. So we work with organic farmers that are using regenerative practices and 100% grass-fed, holistically managed animal operations. And the reason for this is because right now in the United States, only 1% of all ag land is certified organic, and only about 2 to 3% of all pasture land is managed in a way that's regenerative. So we're lagging behind Europe, which is at about 10%. Australia's over 10%, Germany's over 20%, and we make up for that difference with imports. And one of the biggest barriers these farmers and ranchers face is access to right fit capital. So we work to really find farmers and ranchers that have the technical know-how, they have access to markets, and they're really missing the right capital partner to help them either buy more land, lease land, purchase the right equipment, or have the working capital that they need to transition additional acres. So we meet many of our farmers and ranchers through referrals. We have great relationships with the 40 borrowers that we currently have. So we see a lot of organic inbound. And, through conversations with them, visiting the farm and analyzing their financials, we're able to ultimately create a custom debt package that's typically senior secured. So it's backed with real assets and we're in first position. That creates a pretty unique diversified fund where we're able to lend to farmers in the Midwest, to ranchers in the high plains, or even more diversified operations in like the West Coast in California. And we're building a portfolio that's able to mitigate, weather stress and weather risk because of the geographic diversification, as well as market and commodity risk because of the number of farms that grow a diverse, array of products. So that's how we end up meeting many of these producers, and really where the gap lies. So if we can help our farmlands and working lands move from 1% certified organic to even 5 or 10%, that this is a multi-billion dollar opportunity. I mean, right now the total addressable market in the lending sphere within regenerative ranching and organic is about 30 billion. And the total debt market in the US is about 500 billion. So there's a large opportunity. There's more space than, just Mad Capital. I mean, I wouldn't doubt if we end up seeing, other lenders and folks that are purchasing farmland come on the scene as it's the movement towards transforming the food system is really started to accelerate in the last few years since COVID. I think once many people realize that, food doesn't just grow on the Whole Foods, shelves, that those shelves are actually only a foot deep and, the cans of beans are going to go dry pretty quick. People started thinking about where food's actually grown and how it's grown. And the last 5 years has been a pretty foundational and from a movement building standpoint. So I think we're at the right place at the right time, and we're excited to be working with the farmers and ranchers that we are.
And what is your background and Phil's background that make you guys good at what you're doing?
Yeah, so Phil, my co-founder, he has a deep background in scientific research. So he has a PhD in global nitrogen and carbon cycling. He did some work in private equity for a bit. He grew up on a farm in Maryland. So he's a pretty well-rounded individual and puts him in a good position, particularly being able to understand the pain points of farmers and ranchers. He's great at being able to really connect with them pretty quickly and just get to the root of some of the core issues that they're facing, but can also span into the rigorous science that it takes to select a cover crop varietal and then assess why it might be not growing as quickly due to nutrient deficiencies. Like he can get deep on different ends of the spectrum. And then myself, I have a background in carbon markets. So I was running a small carbon fund before this, and learned about a lot of the problems in environmental markets. And that also, really kind of set the stage for trying to get to, I think, more tangible issues.
What's your genius?
I think I have a unique ability to be able to see the whole system and then get into the nitty-gritty particulars that really take operational excellence to be able to deliver on. I think Phil and I, as a team, from a yin and yang perspective, he is much more of the like outgoing, loves visioning, and really likes kind of I think operating in that like big dream state. And I really like operations, finding deals, structuring deals, and raising capital and all of the details that it takes to do that. And we're able to really mesh together because of our complementary skill sets.
I
Uh,
mean, that makes for a good investment, and that's why we chose you guys, because you can't just have a visionary. You have to prove execution. I've seen plenty of people do things where they're not creating the infrastructure of the investment properly, so it's not
mm,
successful. So we've talked about why regenerative agriculture matters. We've
mm.
talked a little bit about organic farming and the sustainable ranchers that you cover, and your guys' background and ability to do it. So in terms of it being a good investment for clients, I know that it's collateralized, and you also said you had some first loss. So for someone
Yep.
looking to look at this investment, how is the risk mitigated and the opportunity shown?
Yeah, so it's a senior secured credit strategy. So we make loans to farmers and ranchers, primarily four types of loans, real estate, operating loans, equipment, and infrastructure. So we're diverse across loan types, as well as loan structures, since we will do traditional amortizing debt, which is exactly how a mortgage is structured on a home. We'll do interest-only credit, revolving lines of credit as well. And then we're lending into a really diverse pool of types of farmers and ranchers. They're geographically diverse. They're diverse across different markets that they're selling crops into. And each individual farm is typically growing anywhere from 3 to 5 different crops. So they also are able to hedge risk at the farm level. Um, all of our farms have substantial equity in their operation. They typically own over 50% of their operation, meaning they have a low leverage of debt compared to the amount of assets that they're holding. So when we make a loan, we will cap out at a 75% loan to value, meaning that if it's $1 million loan or they have $1 million in assets, we can lend $750,000 against those assets. So there's a buffer, a margin of safety if there was non-payment and we needed to ultimately work through being able to see a restructure on that loan. And then at the farm level, there is substantial equity, giving them flexibility to borrow more if they need to, if maybe they have a hard drought or market year where they weren't able to produce as much revenue as they've anticipated. And then at the fund level, we have been able to raise $22 million in first loss capital from groups like the Rockefeller Foundation, the Schmidt Family Foundation, and Builders Vision, where they're paid back secondary in the waterfall. And that puts the primary investors in the preferred class really in a pretty advantageous position because all cash flows from this diverse pool of loans is going to flow to our preferred investors first, before groups in that catalytic first loss pool are paid back secondary in the waterfall. So there's really kind of numerous kind of concentric circles of risk mitigation, starting at the farm level, looking at the collateral, looking at their farm business, and then ultimately at the fund that we've been able to implement to help structure what we think is a pretty high quality investment that is uncorrelated with the broader market. Our farmers' ability to repay the loans in a timely fashion is based on, rainfall and irrigation, so weather, and then also their market price that they're able to receive for their crops. So it's pretty unique as you're thinking about the world of fixed income, primarily being corporate bonds or muni bonds and treasuries. This is another way to add diversification into that yield income oriented portion of a person's portfolio.
Yep, that's why we love it. And it's collateralized, so it's risk mitigated. You're helping regenerative farming or agriculture, which is helping our own bodies and ourselves and our future of our planet. And also from a structural point of view, Mad Capital is on the Fidelity platform. So for our clients, that means that we can put this investment into the IRA accounts, which they can grow the returns tax free, which is a great place to put this investment if you have an IRA with us. Thank
Mhm.
you very much. There's lots we can say about this topic, and if you're interested in investing, please let me know, and my team can certainly talk to you more about it. And we're also always happy to introduce you to Brandon and Phil to get it right from them. We are honored to have you on our platform and thrilled to be investors, and also thrilled to have you in this video so we can teach more about it live. Thank you so
Awesome.
much.
We're excited too. Thanks, Holly. Appreciate the opportunity and look forward to speaking. If anyone wants to get in touch, let me know.
Thank you, Brandon.